Good morning. It's Chris from Excel as well as Solstice. We have updated our websites. You can check us out on the website. So the most important thing I wanted to show you here is in the NASDAQ 100, how far we have traveled from this high down to here on the candle because we tried to look up. Unfortunately, the NASDAQ filled 100% of that first gap here. There's a second minor one down here and a third one down here in between. So if I look at it here, we have lost 8.6% from the NASDAQ high of this year. If I go down all the way down to where that double top happened and the breakout up here, this area would be about 15% if I want to fill 100% of this area up here where the breakout happened. So the most important thing not to be biased. And if I take this area from this low, in case we do go back up, we may, retrieve, between a 2 to 3% back up and completely stay creating a lower high and coming back down this way to fill this portion of this area. So most importantly, you have to understand there can be a possibility 5 to 6% further down to get in that territory on the NASDAQ 100. And what I want to do here is show you another slide up here. I'm going to load it up. And what I want to do is show you the volume profile on the monkey bars showing the annual charts where the profile is. You can see where it created a point of control. This is where the most volume was happening in this area and where we're consolidating and eventually we lost it down. You can see that there's a void in this area. It is easy for that void, in case we cannot come back up, correct a little bit and come back down. And if we continue lower, that void will be, coming back down to the value area high on the NASDAQ 100, and that's the 116 simple moving average, that's the 200 SMA, and that's the 250. And I have the 50 simple moving average and the 18 that I use a lot. Between the 18 and the 50, I usually do a shadow like a 34 SMA, and between the 50 and the 116, I use an 83 EMA. That way, it gives us a little bit better advantage on the setups. Let's take a look at the SPY. What's the volume profile and the monkey bars? And you can see here on the volume profile on the S&P where the point of control is the value area high, value area low. Unfortunately, the time spent here is almost identical, but the time spent is higher on the value high and the value low on the time spent in relationship to the value low on the S&P. And you can see that the point of control was up here and you had one here. This is basically the canyon and this is the valley. In case we do slide is come back in, there's a point of control. There was a lot of volume here developing. We tested that gap. You can see it by these two candles rallied higher. So in case the S&P gonna fall, if I take this high from here on the S&P down to where we close, it's a 2.8 and coming back down to the 116 SMA or the 83 SMA, that's a 4.5%, and the 116 SMA is about 6.5, and between the 116 and the 200 coming back to this breakout where it started, that would be about 8.5%, 8.25 on the S&P 500. But remember, anything is possible. We're going to trade what the charts offer us. Let's go to a clean chart back up here. We're going to load up a clean one. We're going to go from here. So basically, if I look at the S&P, we're going to look at the side action that happened. This is the shoulder, this is the head, this is the shoulder. We consolidated in this area and we're coming to retest here. You can see we didn't test that area. We tested a little bit above it, rallied up, did that double top. And in this week, this was the Friday action last week when we fell Thursday, Friday. Monday was up, Tuesday was up, Wednesday looked up and stayed inside, but we had that Thursday gap down. Friday we looked up, but unfortunately, if they are selling into strength, we had a reversal in the afternoon and came back down. So what I want to do is break it down a little bit on a hourly chart, or let's do it on an hourly chart, 20 days. And what I wanted to show you here, we were consolidating here, up and down, up and down. And in this area, since we started from the Friday, you can see that look up and sold off. Then Monday, we looked up, then we sold off on Monday. Then Tuesday, we rallied up on that gap from the close. If I take the overnight, Then Wednesday, we had the same thing, gap down and rally back up. Thursday, we fell down on a gap down, continued lower, tried to let rally in the afternoon. Then we woke up on Friday inside the range in the lower distribution. They rallied it up, and unfortunately, on Friday afternoon, they sold it off. So, is there distribution? Yes. But we have to be not biased. We're going to trade what the charts offer us because things are starting to turn in the different sectors in the S&P 500. So what we want to do is be able to identify the levels without being biased. So let's go take a look at the measurements on the daily on the SPY. So what I would do is take the high to this low, and that gives me an overall view. I'm going to change it to baby blue, edit the property. So we're going to go edit, select, we're going to make it blue, and I'm going to extend it to the left a little bit so that way we can have the levels from the beginning of the month so everyone says, hey, why are these levels there? If I zoom down, in case we're going to fall further down, you got the 0, the 50, the 100%. There's 150% up to the upside in case things do change. And, Trump says, hey, there's ceasefire, there's an agreement in the Middle East, and the semiconductors does well as, the tech sector, or there's rotation in the different sectors. Is there a possibility coming back 1 or 2% up and creating a lower high and continue lower? Possible. But if we consolidate and eventually break above the 447 to, I mean, this 747 to 750, things may change. But if I end up falling, we may fall towards the 727, 723, and 720 to the bottom on either side. And this is the extensions to the upside expected move on the S&P this week. So let's take a look at the QQQ. I'll do that one as well. We can take a look at the QQQ. We can see how, if I do a linear regression downtrend channel, let's do this together. I can take this peak from here, connect this peak here. You can see we are in that downtrend channel. And if I connect this one to down here, we are in that downtrend channel. If I connect this one from here or this one, you can see it. You are in that linear regression creating lower highs on the Nasdaq. You can see that one here and here are parallel. If I want to compress it a little bit more tighter, you can see that we are creating a wedge in this area. If there's going to be continuation or not, you can, grab these. If there's a little small breakouts to the upside, remember they may be short-lived if there's a small correction and we cannot clear this area up here. So this is why I put the channels so that way you guys can see them. I will keep the two major ones up there, remove this one, and we're going to remove this one. And what I want to do is do the measurements on the NASDAQ 100. We can see the weekly high that was created here on Tuesday. And you take the low from here to here and you measure it so we can get the measuring tool. And we're going to extend it to the left and do the same thing. I'm going to show you the properties so you can adjust it on your charts. This is you can do from 0 to minus 100, from 100 to plus 200. This is the way I have them set up, but I'm going to change the colors so that way everyone can recognize them, the weekly expected move on the charts. So here are your levels on the NASDAQ 100. If there's going to be continuation to the downside, we have filled 100% one of these gaps. There's one small minor one down here, which is very visible on the charts, and that's around the 20%. There's your 50, minus 80, minus 100%. If there's going to be a down move, and if there's an expected move back up, pay attention to the backside of this wedge and the 61.8 if we cannot clear this downtrend channel, which is sharper from the linear regression, the top one and the bottom one on the NASDAQ 100. Let's take a look at the XLK. We're going to go to the daily now. We can see in the daily that XLK, even without using, any moving averages, I'm going to put the moving averages. You can see that island reversal gap. There's an island reversal gap in here. There's an island reversal gap in here. When we rallied up from the March, we've got 1. This is 2. This is 3. We filled the other ones on this side, but we are creating lower highs on the XLK. Let's take a look at the SMH. And you can see in the SMH, we are in a similar situation. We have this island here. We are in a downtrend. In case of a snap back up, pay attention to that linear regression channel. If it gets retested and continue lower, or there's going to be continuation on Monday towards that first island gap reversal in the backside of the channel on SMH. Let's take a look at the XLF, the financial. I just want to break a couple of the sectors in the S&P to show you some are working, some are not. And if I go to the energy XLE, you can see where the energy is. We were, coming back in crude oil, and unfortunately we rallied up and people are looking for safe haven. And this is why things are starting to get a little bit rattled in the cage in the different sectors. So if I look at the micro CL or the USO, you can see where the crude oil was coming back to this area. You can see it filled that island reversal, snapped back up, cleared that downtrend channel, and continued higher. If I take this high to this low, and you can see where we are today in crude oil, and this is USO, the ETF. Sometimes people cannot, time it correctly. Try to be nimble if you are trading crude oil. I do have VPOX. These purple lines are set to show me where the VPOX are, and I do have two more up in this area which were not tested. Okay, there's one here and there's one here that's not tested. I don't have them marked. So let's go and take a look at now the micro ES, and what I want to do is change the micro ES to the from the daily. I'm going to change the style to put those moving averages in there so everyone can see it. What we're going to use a clean SMA. And what I wanted to do here, I know there's a lot of coloring in here. I wanted to show this consolidation where it happened before the breakout right here. I'm going to edit the property, extend it to the right. We're going to put it at 8 so everyone can see where that is. The extensions, coming back in case we do fall that far. Anything is possible, but what I want to do is show you this consolidation above this area. We had this consolidation and a push up in the S&P. You can see that there's this, market here I have due to the tariff, due to the interest rates and so on, the Middle East war and stuff. That was the breakout on this candle. We came back, looked halfway. This was the breakout, rallied up, created a shoulder ahead. Then we did another one up here, which is like a double head. Then if this was considered the shoulder, this is the head. The other one fell back down, did a double top up here. But unfortunately, the 50 SMA that was given us support in yellow, my 50 simple moving average is right here. When we rallied up, it started to get flatlined, as well as my 18 simple moving averages in red and green. You can see it started zigzagging. Are we above? Are we below? Are we above? Are we below? And that cloud here, this is like a 12 SMA or EMA with a 5 on it. So whenever it crosses, it gives me a warning sign. You can see this was the Thursday last week. This is the week before, and this is Friday. And this was, the Friday. This was Monday, Wednesday, Thursday, and Friday. You can see this was Monday because we looked up, we failed. Tuesday was up, almost identical top. Wednesday we looked up, closed right in that area. Then Thursday we have the big slide down and came back all the way up here to close. But Friday we tried to look up. We looked 50% of this candle, the body of it, and unfortunately we closed right underneath it. And I'm below my 50 simple moving average. I'm below the 18 as well as the 12 SMA. This is why I wanted to show it this way. And if I want to go into a shorter time frame to show you how the monkey bars and everything are working, I'm going to show you how to do the style. In the here you can see charts. It says monkey bars. If I do monkey bars, this will show me the last 3 months where the point of control is. You can see I did not move it for this month. You can see where my value high is. So we're going to anchor it. I'm going to move this for this month up here. My point of control is where most volume happened in the prior months. You can see I'm going to just kind of show you where they are in relationship to this month's developing in case I fall through the value area low. So if I zoom in, what I want to do is show where that cloud is, so I can anchor it a little bit more cleaner for everyone. It's 120. If I edit it here, and this is a line I created, you can put it at 412. So that way everyone can see, okay, this is where it is. Okay, let's do the point of control, the same thing. It's in purple. We're going to zoom it in. You can see the point of control is very close. We just have to adjust it to 75.75. Push OK. We're right there. And we can do the same thing to the value area high on the cloud where it is. Activate it. I'm going to activate it. Just drag it a little bit more to make sure it's about 75. Edit the property, and that would be 75. So these are the value area highs on the daily charts, monthly monkey bars. So I go from daily, I'm going to go to a different time frame, intraday. I'm going to show you the 10 days volume profile to show you that we have it on 1 minute. Oops, happens. 30 minutes. And I wanted to show you where the point of control up here, I have a virgin control point. And we were overlapping in this area, but unfortunately, when the Thursday candle sold off, we tried on Friday to look up, and this is the value high, value low is the shadow point of control where it is, and the time spent is usually in green. The sentiment was supposed to be up. If I take the high and low of Thursday candle, we did look up, but unfortunately we couldn't continue because there was a lot of congestion above that's basically creating brick wall. So we fell back down and sold off on Friday. And this is where my point of control value low is and value high. Usually I have a marked on the regular contracts. If I do the MES instead of the micro ES, I want to show you because I do trade the ES myself. I don't trade the micro. You can see where my virgin control point is from the prior week, and these ones were overlapping, so it moved down here. And this is the Friday's closing candle on the volume profile. If I zoom it in, you can see value high is my value low is and my point of control. I want to emphasize this. I usually trade above value or below value or inside the range where it's chop consolidation. You have to change your tone when the sentiment is changing and not being buy to 3 month. We're going to go 3 month like I had it before and leave it right there on the charts so that way when you go to style, it's in the monkey bar. You set it up according to what you need for your trading goals. So this is the daily. I showed you the S&P 500. I do have a lot of lines. Let's go back to the micro ES so everyone can see it. So if I'm going to do the monkey bars, profile, I'm going to go to do the QQQ, the micro NQ, and I want to, micro NQ. And what I want to do is show you the difference, how far we are from the prior double top. We created a low, we rallied high, we did the shoulder. This is a double top, this is the head, and it's been in that linear regression downtrend channel for a while on the NASDAQ. How can I do the measurements for the coming week on the NASDAQ? So I can go from style, I can do 1 hour, 20 days. So if I'm going to measure, you can see the linear regression up and low where I marked it. So we're going to grab the high for the week and the low for the week. We're going to get the measuring tool. This is my high for the week and my low, and I'm going to anchor in for everyone. So we edit the property. And what we're going to do is change the color to cyan or baby blue. We're going to go to 0, 1. Extend to the left. It's ready to go. When I extend it to the low, I know where my levels, where the highs are from 0 to 125, 150, 200, and vice versa to the bottom. If I'm going to look further down, if there's going to be continuation to the downside, and we are in that linear regression, even if I come back here, this is a minor correction. If I cannot clear the 61.8 and eventually the 29,123. So this is the NASDAQ. Last but not least, I want to show you the Magnificent Seven. Max. And you can see in the Magnificent Seven, if I go from here to the daily chart, we can see that we have fallen quite a bit, and this is the gap. I'm going to do a clean one. We're going to get rid of the moving averages. We're going to go into style, go back in the setting. We're going to go clean so everyone can see it, and you can see the island reversal in the Magnificent Seven. He's on Tesla. You can see it as well. We filled that gap, the island reversal. I had it marked here when we filled it, rallied up. What we were in that linear regression, we couldn't clear the 450 here and eventually the 417. We continued, grinded lower, and the report came in negative. Let's take a look at Google. Here's Google L. You can see that it was pushing up, consolidated, couldn't clear the 350, 865. It looked up in this area. You can see it and eventually fell down on the earning report. We ended up down here. So most importantly, you got to trade, and I'll do IGV. He's IGV, and I'll do DRAM and North Korea DRAM. You can see where it is, and EWY. And I wanted to show this as well to show you that things are not, settled in the overall market. I hope this video was helpful. If you want to check us out on Discord, get in contact with us at axelatrai.com because this website has been merged so that way it makes it easier for everyone to connect with us. Take care. Over and